Hi, welcome back to another weekend scan with Jeepers. This is the 14th July 2019 edition. So maybe before I actually go into the counters, I'd like to share about how I allocate my risk according to the market trends. So I use the 50-day moving average, 200 days moving average as an indicator. And according to whether it is a downtrend, uptrend, sideways trending market, for STI, I will actually allocate risk accordingly. So for example, when it's downtrending, I will actually risk lesser, 0.5 months of my savings, because although there will still be uptrending counters, during the downtrend, people are less willing to place risky bets for trading, and therefore there are lesser money in the market speculating on the counters. So even if you see a possible bullish breakout, it is likely to happen. However, the breakout might not be as great compared to an uptrend, and therefore I'm willing to spend a little bit more, risk a little bit more in an uptrend compared to the downtrend. And of course, when it is sideways trending, because it's undecided, I need to be prepared, and therefore I risk 1 month of my savings because if it trends downwards, I just scale back on the risk. Okay, we cut away all the less likely and like less possible counters, and when it trends upwards, I can power out on more trades. So let's go to the STI chart for me to illustrate that. So this is the STI index chart for the monthly chart. I actually color coded them so that you can see when are they like sideways trending, when is it upward trending, and so on and so forth. So right now personally I think it's upward trending. You might feel otherwise. And if let's say we go to the weekly indicator, okay, you can actually see that it's overlapping with sideways and bullish upwards trend. So for myself, I'll allocate slightly higher amount of risk that I'm willing to accept. So yeah, let's not waste time and go directly to the share counters themselves. Okay, for first read, right, looking at the weekly time frame, you can actually see this price picking up above the 40 weeks moving average. So down here, right, is something that caught my attention. So let's go in directly into the daily time frame. So in the daily time frame, you can see something happening down here, something like a consolidation. So how I would actually play this counter is that actually, I mean, I earlier had some kind of planning. Okay, so if I were to go up higher, this could potentially be the way I enter. However, if you're in it for a trade, you could wait for it to break higher. Okay, and then you set a entry point and a stop loss, something like that. So I mean, with all this kind of potential breakup coming up, a reversal pattern, do your due diligence, put very little risk into this, because reversals normally don't have a high chance of success. So the counter Wing Tai also caught my eye because the price book above, somewhere around here it started breaking above the 10-day moving average already. So if you want to take a look, I draw all the lines already. Okay, take a look at the daily time frame. You can actually do some kind of trade planning, because like somewhere down here, maybe not there. Okay, somewhere down here could be the area of consolidation. Okay, this kind of consolidation. And then how you will trade is that I will do some trading plan somewhere down here. Sorry, it should be blue. Okay, with some red color line down here. So once it breaks higher, once the counter breaks higher, you enter with a stop loss. Okay, and then you can see whether it could potentially break higher lor. That's all. Keppel Corp. So this Keppel Corp, I saw it in the weekly time frame. Something interesting happened. Price above the 40 and 10-week moving average. So let's go down to the daily time frame and take a look. So in the daily time frame, if you take a look at it, you see this like a price consolidation pattern. And what you could potentially think about it is it breaks the price somewhere around here, and then you enter, and of course you need to set a stop loss somewhere down here. So I can imagine the thing, breaking higher, you enter, and it continues breaking higher for the reversal. So this is how my thinking for Cable Corp. So UMS is one of those counters that I have been taking a look at previously. However, I think it's not so positive, not so possible for it to break out higher, because you can see that it is still bearish, because price is below 200 days and 50 days moving average. And then the next important thing that there is this horizontal resistance. So convergence of factors, I think it's unlikely for it to break up higher, but if it does, then you want to have a plan, something like this. Hong Kong land. So if you look at Hong Kong land, right, one of the issues I have with this is there is a very huge, this area is a very volatile. So while it might seem to be like bottoming out and stuff, it might be a little bit too challenging to actually place a bet on it. So let's take a look. If it's 12 cents, about 15 cents, okay, and then you look at the support somewhere around here, uh, and then you're gonna have a 12, maybe a 15 cents stop loss. Let's put a 15 cent stop loss, somewhere around here. Okay, and then you're gonna have enter point somewhere around here. Okay, so what you have is a very huge, uh, you have something like this. And honestly speaking, do you think this is a very good risk of reward ratio? I think otherwise. So yep, that's all. Okay, someone asked me about Hong Kong HSBC holdings. Okay, so let's take a look at the weekly time frame. So I think weekly time frame is very interesting because it sort of tried to break out higher. Okay, let's go in here. Okay, but then could not. It could not. You can see obviously it could not. It was undecided. So if you go down, I mean you draw all the horizontal supports and resistance, and then you go to the daily time frame. Actually what you will see is that you can actually tell why this counter was interesting to some people because of the ascending triangle. However, I would think that it's relatively difficult to enter because let's say it breaks a higher, okay, immediately it sees a resistance level already. So let's say this is the resistance will break above, it breaks a higher, okay, there's a resistance level already, and this is like a range trading pattern. So I mean if you think about it, price might go up higher, break a little bit higher, and then retrace back down to the earlier support again and continue on. So I feel that the risk or reward ratio is not too high, especially if you just look at this kind of 3% kind of thing. So might not be the best way to enter, but if you do want to enter, you can wait for it to consolidate more and then break up higher, then you enter, then you might have a better risk to reward ratio, as you can see. So somebody asked me about Kofu. So Kofu is actually not too bad if you look at it. Price is above 200 days and 50 days moving average. Okay, is higher than its IPO, and I think there's some positive news lately. However, one of the issues I have with it is that the ATR, if you want to take a look at it, might be a little bit high. Okay, it's about 2 cents. Okay, if you put 2 cents at here, maybe 2 cents, and then you want to make an entry, maybe you make an entry down here. So unless you are hoping that it breaks higher high, makes a higher high, okay, so somewhere where it becomes attractive, you're hoping for it to hit somewhere like 90 cents. So I mean I think it's possible, of course. um However, I think this is a resistance level that it needs to break to go higher. Okay, someone asked me about EC World REIT, and if you take a look at EC World REIT, Actually last week's very bearish candle makes me want to stay out of it until I have a clearer picture. So I mean, well, you could play along like a range trading kind with some stop loss like down here. However, I would not want to spend too much time on this counter because I mean, you go to the daily trading candle, it's like breaking lower and lower. So I have a gut feel only, okay, of course, that it will go lower. And if it does go lower, maybe around 60 something cents, 68 cents, 66 cents, then you might want to enter some more. So I will stay out of it for now. Okay, to summarize, I shared about three counters that I saw during my weekly scan. Three of them are actually reversal plays, so allocate lesser risk to them because they are less likely to happen. Okay, and for the five counters that was crowdsourced, these five ideas, I think only one of them was something that I might trade. So that's all for the counters. So if you do have some trading ideas or some interesting thoughts, do share in the comment, subscribe and like, and thank you for your time.